Rising inflation is a real concern for many retirees, and it can erode your portfolio's purchasing power, especially when you're relying on fixed income from investments. If you're wondering how to safeguard your retirement portfolio from the impact of inflation, you're not alone. In this video, we'll explore actionable steps you can take to protect your wealth and ensure your retirement is secure, even as inflation continues to rise. Stick with me until the end, because I'll be sharing a strategy that thousands of American retirees are using to shield their savings and grow their wealth. First things first, let's talk about diversification. It's one of the most effective ways to protect your portfolio from inflation. Many retirees tend to stick with traditional stocks and bonds, but these can be severely affected by inflation. While stocks may perform well in some cases, inflation can eat away at your real returns. Bonds, especially long-term ones, are also vulnerable as interest rates rise to combat inflation, which pushes down the value of fixed income investments. Now let's consider an often overlooked asset class: precious metals. Specifically, gold has historically been a hedge against inflation. Unlike stocks and bonds, gold tends to retain its value during times of economic uncertainty. In fact, it often rises in value when inflation increases. If you're serious about protecting your wealth in the next 2 weeks, I highly recommend you check the first link in the description for a free guide on why thousands of Americans are opening gold IRAs to safeguard their savings against inflation. Gold IRAs allow you to add precious metals to your retirement portfolio in a tax-advantaged way, which can help you diversify away from traditional assets like stocks and bonds. But you need to be cautious when choosing the right gold IRA company, because there are some companies that overcharge or even scam investors. This is why having a trusted advisor or expert guiding you is crucial. Another crucial aspect is income-producing assets. Inflation tends to push up prices, including the costs of living, and that means you need investments that can generate consistent income to keep pace with rising expenses. Real estate is one such asset. Rental properties, in particular, can generate a steady stream of passive income, and property values often rise over time with inflation. However, managing real estate can be tricky, especially if you're not familiar with the market, or if you prefer a more hands-off approach. Gold, however, can offer you that stability without the hassle of dealing with tenants or property maintenance. That brings us to the topic of annuities. These can provide guaranteed income in retirement, which sounds like a good option, but there's a catch. Annuities, especially fixed annuities, are often not inflation adjusted. This means that while you may get a fixed income stream, inflation can reduce the real value of those payments over time. If you're relying on a fixed annuity to provide your retirement income, you may want to explore whether adding a gold IRA could help bolster your portfolio's ability to keep pace with inflation. The key here is to think ahead. You don't want to wait until inflation starts eating away at your savings. If you're over 100Ks in your IRA or 401k, or even if you have $590 in savings, I highly recommend considering a gold IRA as part of your strategy. Thousands of Americans are turning to this solution to protect their wealth against inflation, and you can too. Before we wrap up, let me remind you again that if you're serious about protecting your wealth from inflation, click that first link in the description to get your free gold IRA guide. It's perfect for American retirees, and it's the best step you can take to ensure your savings don't lose value to rising inflation. Thanks for watching, and I'll see you in the next video.